welcome to the Bitcoinlens podcast, episode 3. So, today I wanted to cover the why of Bitcoin and why I think it is extremely important to educate yourself on this, and why I think this is, in my opinion, the most superior form of money, medium of exchange, store of value, and also as an investment. So, let's jump right into this and really get into the details here. The first thing I would say is really important to me is the energy aspect of Bitcoin. So Bitcoin's market cap, which is roughly 1 trillion, that is monetary energy, because this is all backed by energy. All Bitcoin mining, all Bitcoin is held and backed by energy. It's backed by roughly 19.6 gigawatts of energy. This is the whole Bitcoin network. Just to kind of give you a perspective of how much energy that is backed by, the US Navy runs on about 4 gigawatts of energy. So we're looking at roughly 5 times the amount of the entire US Navy is the energy backing Bitcoin. If you look at nuclear plants, the average nuclear plant will be generating roughly 1 gigawatt of energy. So we're looking at about 20 nuclear plants is the amount of energy Bitcoin is backed by. Now, the difference between the U.S. Navy or random nuclear energy plants or nuclear power plants is that Bitcoin's energy is distributed. It is distributed across Earth. So you have Bitcoin energy, or the Bitcoin network backed by energy and mined in all these different countries. You look at Asia, North America, South America, Latin America, you look at Middle East, Africa, it is being mined everywhere. So that redundancy or that distribution is really valuable, and it's a really important aspect, as I will go into the next points here. Also, a key thing, that we forget sometimes is there's a lot of talk how Bitcoin is terrible for the environment. If you look at the facts, it's about 60% of Bitcoin in 2024 is now being mined through renewable sources. So this is extremely important, and it's extremely green when it comes to energy consumption every year. It's becoming more green every year. So this is really important, and this is something that there's been a lot of kind of misinformation surrounding this. Also, from a compute perspective, this is kind of another big thing. So Bitcoin is backed by 786 exahash of computing or hashing power. Now, this is driven by ASICs processors, which they're roughly 2,200 times more computationally efficient than your general processors. So if you take the biggest companies, the biggest tech companies in the world, you look at Amazon, you look at Facebook, Apple, Microsoft, you take all their computing power, combined, they're not going to have 10% of the computing power that Bitcoin has, or that Bitcoin is backed by. So that's kind of a key thing. And the Bitcoin network's efficiency is also improving every single year. So, with Moore's law, this is kind of more of a technical term, but if you look at Moore's law, this essentially means that you're going to have double the amount of transistors on a silicon chip roughly every 2 years. So the efficiency of compute for the Bitcoin network is becoming more efficient, and it is becoming cheaper as well. So this kind of leads into my third point here, and that is security. So with a cybersecurity background, this is kind of a key one for me. And essentially what we're looking at here is we want redundancy and we want integrity. And Bitcoin is secured by distributed digital energy. So not only is it secured by distributed digital energy, but like I said earlier, it's 20 gigawatts of energy roughly in 2024. And it is secured by distributed ASICs computing power, the 786 exahash of computing power I mentioned earlier. So from a cybersecurity perspective, you look at an adversary, they're going to have to outnumber the 786 exahash of computing power in order to manipulate the blocks on the blockchain, and therefore tamper with the integrity of the Bitcoin blockchain. So, from a cybersecurity perspective, the distributed energy and the distributed compute, not only the amount, but as far as how distributed and redundant it is, it's extremely important. They're mined globally. Bitcoins are mined globally. So it's mined everywhere. It's mined by corporations, by countries, by mining pools, by individuals. And this is another important part of the redundancy piece that I mentioned earlier. So essentially, you can take down the grid in a country or a state or a province or a city. All the mining capacity will go down in that city, state, country, province. But due to this redundancy, you can literally take down multiple countries and you're still going to have the integrity of the unit of account and the integrity of transaction history and the integrity of this distributed ledger is going to go untouched because of this aspect, of these aspects. Now, accessibility is another major factor for me. So if you look at things like the US dollar, you look at gold, you look at silver, you look at real estate, you look at S&P 500, these are all good and well, but the reality of it is, unless you're in a first world country or you're a little more well off in a third world country and you're exposed to these things, it's actually a very small percentage of Earth are actually exposed to all these things. So this is really big for me. I love that everyone has a fair chance when it comes to Bitcoin. I mean, I could be poor, living in a village in Africa or Asia, and I can essentially acquire the same Bitcoin that a hedge fund manager sitting in New York can give his clients access to. Now, also not just the location of where I can access it, but also the method of how I can access it. I don't need some kind of crazy software. I could literally just quickly download an app from a hotspot sitting in Africa or sitting on some island, as long as I have some kind of internet access via satellite or a hotspot, and I can buy the same Bitcoin that anyone in a first world country can buy, which is incredible access. Also, you think of not just geographical type access, but you think of access of, traditionally Bitcoin was accessed or crypto was accessed by more technical folks. So folks working in, IT type jobs or programmer type jobs, cybersecurity type jobs. These are traditionally the people who initially bought Bitcoin in a peer to peer manner. Now you fast forward to today, and Bitcoin is now accessible through exchanges, crypto exchanges, which is easy to essentially set up an account real quick for yourself. You can buy through traditional finance accounts or brokerage accounts. You can essentially not touch anything and just have your registered investment advisor, expose you to all these ETFs that now the 11 US ETFs. And like I said in a previous podcast, there's now multiple ETFs all across the globe in Europe, Asia, etc. So you can essentially buy Bitcoin now through multiple means, and you don't even have to physically buy it yourself. Now, if you're more security minded, you can also store it on a cold wallet, which that's ideal for someone who's a little more security minded, someone who's a little bit more cautious of the powers that be, and someone who wants a little bit more freedom. I believe personally the accessibility of having my Bitcoin on a cold wallet is the ultimate, but I'll go a little bit deeper into that here in the next points. So, another really key thing for me is scarcity. So, gold, silver, the US dollar, any major currency through first world countries, stocks, real estate, these none of these are finite. You can always mine more, you can always print more, you can always issue more stock. A company can decide tomorrow they're going to issue another 1,000 stock or shares, if you will. Gold, even though the mining rate is, kind of slowed down over the last, few decades, it is still increasing. Mining capacity is still increasing by at least a percent and a half a year. So we're never really seeing the end of, gold's full supply. The same with silver, the same with copper, the same with the US dollar. I mean, that one's probably the most obvious since governments just keep printing money to fund these wars, bail out their friends, and, provide stimulus. These are all good and well, In many cases, it's not going well, but it's really hurting us. Your savings is getting hurt every day. So if you save any of your money in US dollars, or you have any of your US dollars in any asset, you're getting debased every single day. So the scarcity is always a big thing for me. And with Bitcoin, you have 21 million. 21 million Bitcoins. Now there's 100 million Satoshis in each Bitcoin. So that kind of comes to my next point, is the divisibility of Bitcoin, which is very important, right? We can't just have 21 million Bitcoin and it just have zero divisibility. We need this able to be divisible, because in order for us to have this as a medium of exchange, we need widespread adoption. To have widespread adoption, you're going to have people buy in at very low prices. And in order for people to buy in at low prices at a rate like today, where we're looking at, I know Bitcoin's dropped to 54,000 today, but you're going to need it to be divisible. So it is divisible, and 100 million may sound a lot for a single Bitcoin. 100 million pieces, if you will, of a Bitcoin may sound a lot, but ultimately, the beautiful thing about this is we're in such an early stage of adoption that that's actually going to be a significant amount. So you look at one Satoshi, which is one out of the 100 million divisible pieces within Bitcoin, it's going to be worth a lot of money one day, you know? And this is super important for us to trade. If you wanted to buy smaller things like a cup of coffee, a sandwich, you're not going to be able to use a Bitcoin for that. And that's another thing with divisibility. You compare that to gold, silver. I can't just quickly give you a fraction of an ounce of Bitcoin to trade with you. Not to mention, I don't want to carry my gold, my silver, my copper. I don't want to carry it with me everywhere. I can, with a click of a button, I can quickly send you a 1 millionth fraction of Bitcoin anywhere on Earth. You can be located anywhere on Earth, and I can send it to you in many different ways. So for store of value, medium of exchange, and just widespread adoption, I think the divisibility is a key factor that you don't have in some of your commodities, securities, and fiat. Now, transferability, this is another key thing for me. This is really important, since I have options here. I can transfer my Bitcoin via layer one, via the traditional Bitcoin layer, or I can transfer it on layer two, layer three. I can use things like the Lightning Network. I can use eCash, Fediment. So these are a little bit more, these are more user-friendly ways to transfer Bitcoin as well. And this kind of comes back to this, to the accessibility as well. Like, you know, sometimes it may be a little intimidating for folks to buy Bitcoin right off the blockchain and buy it on that layer one and transfer on that layer one level. So, you know, using apps like eCash, Fediment, I've used this with friends and family, and this is super easy for them to use. It's super, I mean, it's just basically a little app that you download, and you know, you can use this just like any other app you would, like PayPal or Venmo, anything like that. It's almost that easy. So this is a big one. Not only not only is this really key for Bitcoin to make it more accessible to folks who are a little intimidated, but on the layer one there, but also this optimized Bitcoin's performance as well, because the fees are going to be lower on these layers as well. And it's still a full exposure to the underlying Bitcoin. So those are some of the key things on the transferability side. As far as store of value, this is a huge point for me when it comes to Bitcoin. The store of value is, some would say, probably the best or the most important factor. If you look at the US, so the US in 1971, when we went off the gold standard, we had roughly $600 billion in M2 supply. So 600 basically in different forms of the US dollar, certificates, funds, and just straight up actual dollars. There was 600 billion of M2 money supply in 1971. You fast forward to today, and there is now 20 trillion, 21 trillion M2 money supply in the US. Also, whenever medium of exchange became centralized historically, there has been a financial collapse that's followed. So this is really an important piece and kind of ties into the store of value, because the debasement that happens every day really takes that incentive away of storing your cash, storing your dollars. And just to kind of give you an idea, the Bureau of Engraving and Printing, they announced in 2020 that 3.3 trillion US dollars was printed just that year alone. Now I know it was COVID, but still, we're looking at astronomical amounts of money supply. Like I said, 21 trillion of M2 money supply right now in the US. And we're looking at the US dollar monetary expansion, roughly 8 to 12% per year. So good luck saving that cash. If you're making your profits on S&P 500, just assume you're making a negative yield there. So if you're saving in cash, you're saving in stock, saving in real estate, I don't think you're really truly making money there. You just got to account for inflation. So if you want something with truly zero inflation and you want a store of value where you know that you're always going to have the same ratio of the total supply of that thing, Bitcoin is absolutely going to be the answer for that. So, this protects you from war funding, it protects you from stimulus, from bailouts, all those things. As far as a medium of exchange, this is another big point for me. So, medium of exchange, the Bitcoin fees were basically based on the time of day, based on congestion of the network. But the interesting thing a lot of people don't know is transferring one Bitcoin is the same fee as transferring 1,000 Bitcoin. It's just the time of day, the type of congestion we're seeing on the network, but you're not getting a different fee for a different amount you're sending. So this is really important because I can send $1 million across Earth for the same fee as a friend who just sent me, one Satoshi and living a street down from me. That's kind of important, right? So that makes Bitcoin really easy to transfer, a great medium of exchange, and it just makes it fast as well. I can do this in seconds. I can transfer Bitcoin, like I said, across the globe within seconds. So as far as a medium of exchange, it's real easy. I can do it via app. As far as local medium of exchange, it's super easy to go to any vendor and just quickly pay them via the Lightning Network. You can do it via the Layer 1 network as well. But if you want to just use Layer 2, Layer 3, use Lightning Network or Fedimint, something like that, you can pay someone real quick with Bitcoin. And of course, that adoption is growing and growing and growing. You look at places like Costa Rica, you look at places like El Salvador, they've literally got little cities now and, dedicated to Bitcoin and strictly dealing in Bitcoin. And then, of course, President Nayib Bukele of El Salvador, he's essentially turning this country into a Bitcoin nation where he's literally deployed Bitcoin to every single citizen, and he's stacking that Bitcoin as a reserve asset, buying at least one Bitcoin every single day. So countries like this getting themselves out of debt, out of the debt cycle of the IMF, is really promising to see, and I surely hope that we see this on the first world country space as well, in the US and other countries. So also, you don't want Bitcoin to be free. The transaction fees, you don't want that to be free, because an attacker could spam these. They could spam basically billions of transactions and congest the network. So for those of you wondering, like, why is it not free? That's kind of a big deal. Now, I gave you a lot of points here of why I think Bitcoin is great and why I think it's got some of the strongest characteristics of money, medium of exchange, store of value. But I did want to cover the investment aspect of it as well. So I did a whole episode on Bitcoin versus real estate. So I do invite you to go check that out. It was really informative, in my opinion. Um, but from an investment perspective, here's some of the things I look at. It's the perfect store of value with zero inflation. I can't ask for a better store of value vessel than Bitcoin. The adoption is widening. So whatever amount you've stacked in Bitcoin, like I said, the adoption is widening. The ETFs are widening. Corporations are continually adopting more Bitcoin and buying more Bitcoin. Institutions are educational institutions, nation states. The adoption is just getting bigger and bigger and bigger. Also, a big thing to think of is, unlike stocks, You look at things like GameStop when, brokers don't like the way the trading is going, when we're seeing short squeezes or we're seeing sell offs, they don't get to just stop the Bitcoin network. So with stocks, we obviously have seen this, where trading is halted because maybe some of the activity is not friendly to, the investors. So the bigger investors, so what do? They cut off the poor man to kind of cater to the rich man. Bitcoin, you don't have that problem. So the poor man's protected, the little man's protected. From an investment perspective as well, I can move this to any jurisdiction. This is huge for me. I can self custody it anywhere. Unlike a real estate, unlike stocks, unlike gold, silver, I can self custody this and move it and host it and keep it everywhere. Not only that, but I'm protected by multi-sig authentication. If my cold wallet is stolen, I've got seed phrases I can use. So this is all key. I can't self custody my gold everywhere. I can't self custody copper, silver, real estate everywhere. I leave I leave my investments behind. Bitcoin, I don't face that problem. A big one for me is just from a moral standpoint too, is that Bitcoin is for everyone on earth. Bitcoin is not just for the elite few or the elite or the 1%. It is for everyone, like I mentioned earlier. And, it is basically accessible the same to everyone, which is key. So finally, I know I mentioned this previously, but for me, it's a hedge against inflation. It's a hedge against government picking winners. It's a hedge against war. It's a hedge against getting out of jail free cards for banks or large institutions. And when governments control the money, they control their citizens. How? By debasing your money, it impacts your freedom. It impacts your freedom. Absolutely impacts your freedom. If my currency is being debased, I have less freedom because I now have to make more of that currency in order for just to keep up with how fast it's being debased. It impacts time with your family, impacts your buying power, impacts your ability to retire early. And with government issued money, you generally have a very low time preference. With Bitcoin, you have a very high time preference, meaning with government issued money or government issued fiat, I'm incentivized to spend my money as quickly as possible to avoid the inevitable cause of inflation. With Bitcoin, it's the opposite. I don't have that time. I don't have that high time preference. I can keep my money, I can store it, I don't have to spend it, and I will still have the same amount in units. Also, keep in mind when you look at the price of Bitcoin, don't get tricked by that too much. Right now, it's good. And obviously, the price history in US dollar has been impeccable. But for the for the unique scenario where the US dollar fails, where most global reserve currencies or major currencies in the world have failed historically, if that fails, we're not going to be concerned about the price of US dollars and Bitcoin. You're going to be concerned about how many Bitcoins you have because it's going to be priced in something else and it could potentially just be priced in Bitcoin. It doesn't have to be necessarily backed by something. We'll have to see how that's going to play out, but just keep that in mind as you think of the price of US dollar. I see sometimes folks, they put too much weight in what the price is in US dollars. But if the whole world believes that Bitcoin is the preferred medium of exchange, we're going to care how much Bitcoin we have, not how much Bitcoin we have in US dollar. Now, especially this week, I can't personify this enough, but the price of Bitcoin is nice and it is nice to see, but really we should focus on the value. What is the problem it solves? If you don't understand the problem it solves, if I haven't articulated it well enough, and obviously there's way more details we can go into in how the monetary system is broken. You can listen to my episode on my concerns for the US dollar. But if you want a more in-depth history of the failures of the global economic system, I highly recommend reading the Bitcoin Standard. This is a fantastic book, and it really just goes into all the way from the 17th, 18th century, how Bitcoin or how currencies and medium of exchanges and the form of money has evolved, and how it got better and how it got broken again by centralized governments, and how it got better and got broken again by centralized governments. I'm telling you, you read that book and it really gives you a perspective of what Bitcoin is solving, because throughout these centuries, there's also a lot of lessons to be learned, not only of how monies and mediums of exchange fail and how they succeed, but also what are the best characteristics of those mediums of exchange and monies throughout the centuries. And that is what Bitcoin attempted to solve. So rather than giving away the whole book, I highly recommend reading that book, and that'll give you more perspective as far as like why Bitcoin is solving the problems of the past, if you will. Now, that is pretty much all I have for this episode. I really appreciate you listening, and this is really an important one. And, as you look at the price fluctuation, I don't want people to panic. Don't panic with the price fluctuations. There's always going to be big world events. I the Bitcoin's resilience it never ceases to amaze me. Everywhere from Mount Gox to government seizing Bitcoin, or sorry, governments banning Bitcoin, to governments banning mining, to big government sell-offs of Bitcoin seized from criminal activity, to corrupt crypto exchanges, to corrupt crypto individuals, to fears of war, fears of recession, fears of the macroeconomy. Bitcoin's price will always be volatile, but you don't need to focus on the price. You need to focus on the value and how it's solving the problems of the past and how it's acting as the solution into the future. Read the Bitcoin Standard. That'll give you way more insight into this. But I hope this was an informative podcast for you. Once again, as opinionated as I am, I'm not a financial advisor. This is strictly just my Bitcoinlens journey into Bitcoin and to how I see the world and the economic world around me. But please make your own decisions or consult a financial advisor. I really hope you enjoyed this podcast. Hope to see you on the next one, and stay tuned for that next release. Have a great day.